next we're going to be talking, because people start doing financial planning at the end of 2017 for 2018, we're going to be talking about credit scores, how to keep your credit in check, what is a credit score. So let's get started. First off, Canada has their own credit ratings, and they're done through Equifax. And if you do want to pull a credit rating, it doesn't cost too much.
How can they do that? Do they go online?
Yeah, they can go on Equifax. Anyone that's rented a property before has gotten a credit rating check. So you've had to order a credit rating. That does impact your credit score. You can't be ordering too many credit score checks. But it is smart to do it every once in a while, because there is sometimes fraud or credit fraud out there, identity fraud. And by checking your credit rating maybe every year or every 2 years, will give you the opportunity to see what you've been applying for and see if there's any irregularities.
That's right. There's actually a cool service, something called like Credit Check, that a lot of the Canadian visa companies are now partnered with. And they'll actually check your credit score on a regular basis, and they'll mail you statements every 3 months or whatnot. And it's a good way to keep in mind if anything's changed on your credit, or you can kind of track if your credit's going up or down. Use them.
Yeah, and actually the credit rate score is called a FICO score, and they go by a number amount. So anything over 800 is amazing. It's like a perfect score. Not many people have over 100.
840 or something like that.
Yeah, anywhere between 700 to 800 is really good, and that's where the majority of people are. Anything under 600 is bad. Also, there are two credit scores that you should be aware of. One is that FICO score that's pretty universal across all institutions. Also, there's another credit score like when you're at the bank. So, for example, if you're a BMO client, you have an internal credit score as well. And the way that you up your credit score inside a bank is by having a regular income. So every time you get paid, if it's the same, you build your credit score inside the bank by having a savings plan in one of their savings accounts, and by having credit with that bank. The more credit you have with that bank, the more internal credit you have at the bank.
Albeit you need to be paying it on time.
Right, exactly. Which brings us to our next part of credit scores. There are various credit score hits that you can get, negatives that can happen to your credit score. These are described as R something. So an R1 is not very bad, to an R9 is very bad. Okay, so an R1 is you missed your to pay your credit by 1 month. An R2 is 2 months. An R3 is 3 months. An R5 is you failed to repay it in 4 months, and an R9 is you claim bankruptcy. So varying amounts. When you're applying for a mortgage or a loan or a credit card or whatever the case is, most banks won't care much about R1s to R3s, but it is important to keep those off of your credit rating. But if you have an R9, you're pretty much unlendable. You're considered a bad lender. And some things that make up your credit score when applying for things: your previous credit performance, meaning how well you've been able to pay off your credit; your current level of indebtedness, meaning if you have a $30,000 line of credit, are you at $30,000 or are you at $10,000? That affects it. The time the credit has been in use, meaning have you been using your credit for 3 years, 4 years, the longer the better. And the types of credit available. So line of credit or mortgage debt is not bad, but credit card debt is bad.
Yeah, going back to people that have debt right now, like let's say you have a $20,000 line of credit and the bank says, hey, I'll approve another additional $10,000 increase on it. A lot of people go, you know what? I'm already at $18,000 on my debt, my line of credit, so I don't want to really increase it or whatnot, because then I might take more of it. The other thing you got to look at is accepting the increase on that debt, because that actually improves your credit score. If the bank sees that you have a $100,000 line of credit and you're only using, let's say, 20% of it, it looks better on your credit, and your credit rating will actually improve, as opposed to having a $100,000 line of credit and using, I don't know, $99,000.
A lot of people think that applying for new credit is a bad thing and it hurts your credit score. It's actually not true. So when applied for your overall credit score, only 5% of it is due to pursuit of new credit. So if you were to go to 20 different banks and applied for 20 different Visa cards, even if it affected you to the maximum amount, it would only decrease your credit score by 5%. So that's actually not a lot.
5 points or 5%?
5%.
What is the difference between the percent or the points? Well, we know that the points from a good credit score being 700 and above, and a mediocre credit score being 600 or 700 and below to 600. That 40 points can put you from really good to average. So it's something to consider. You don't want to use it too much. Use a couple banks. They're pretty standard.
And another thing that you should know as well is that if you apply for credit in a 1 month period at one institution, you only need to get pulled your credit score once. So that's another thing too. If you're applying for a Visa card and a line of credit and a mortgage, it's all under one hit to your credit score.
Exactly.
If it's done within 1 month.
Yeah.
You do want to make sure that your credit score is in good standing. In order to do that, get a credit check once a year, once every other year. That also helps you prevent any kind of identity fraud or people going out and borrowing things under your name. Your credit score is broken up into multiple different categories of R's that affect your credit rating, and also the ability for you to get credit in the future is dependent on a bunch of different kinds of things, such as how much of the debt that you currently have that you're using, and what is your payment structure, and how many applications have you done in the last 3 months. If you do have any questions about your credit score, please DM us. We'll be able to help you with that, no problem.